Tab 6, Profit Requirements. This is what I call my bread and butter screen. This one here determines your profit goals, your pullback after reaching your goal, your profit protection, your stop loss, your trailing stop loss, and a re-entry pullback. I'll talk about each one of these. For each one, you can fix the amount. You can put a fixed dollar amount, and that's a per share price. So in this case, I'm saying that I want a 15-cent profit goal. That's it. That doesn't sound like much. Let's raise it to a quarter. Let's say, okay, I want to make at least a quarter. If the stock price in a long position goes up a quarter, then I have reached my goal. Now, or I can say a percentage. I could say, okay, I want a 5% profit goal. And if 5% results in a number, say, smaller than a quarter, then use this minimum amount. I want to make at least a quarter. So if I was trading a dollar stock, 5% of a dollar stock is only a nickel. So obviously that's below a quarter, so it would have a quarter goal. Or I can fix it and just say, you know, my goal is a quarter. But if you are trading stocks that have a wide range in price, a $30 stock versus a $1 stock, you know, then it might make more sense to use a percentage and a minimum amount. Okay, for demonstration purposes, we'll just leave the 25-cent profit goal. Now the next thing that has to happen, after the stock goes up a quarter, it has to pull back by this amount. And in this case, we said 4 cents. Let's go ahead and change that to 7 cents. So once the stock goes up a quarter, the stock has to drop 7 cents for you to get out of the position. So in that case, if it was up a quarter, then it would have to drop down 7 cents so that it would only be up 18 cents, and it would take you out with an 18-cent profit. However, say the stock continues to climb up higher and the stock goes to 30 cents. So 7 cents from that would be a 23-cent profit. So you can ratchet up. I call it ratcheting up. As the price goes higher, your get-out price goes higher. And because the automated trader did not put any kind of a limit order at the broker, your orders are completely hidden from the public. So the automated trader runs in what we call stealth mode. And stealth mode means that your order is sitting inside the automated trader only. And if you're sitting in front of the automated trader, you can look at the screen and you can see where it wants to get out. You'll watch that stock price go higher, and you'll see the get-out price that following it up. And the get-out price will always be 7 cents lower than the current price. And then as the stock price goes down, if it comes down 7 cents from the high after you achieve that price, after you've achieved your profit goal, then it'll take you out. So in essence, this becomes a trailing stop loss that only kicks in after you reached your goal. Now the next one over here is our profit protection. It says start profit protection here. Now this feature is a CoolTrade patented feature, and this says once I've reached, let's go ahead and raise this a little. Once I've made, say, 14 cents, I want to start profit protecting. Now this feature what it'll do then is it'll look for the stock. Once it reaches 14 cents, even though you haven't made this goal, once you've made 14 cents, then the automated trader will start looking at the market conditions in the stock price and determine, is the stock pulling back? Is the market pulling back? So it's different than a trailing stop loss. You can almost call this one here, I kind of call this a floating trailing stop loss, because it kind of looks at the market conditions and the stock's condition and determine, should I just get out of this thing and lock in something? We used to hear stories of, hey, I was making all this money in the morning, and then by the afternoon I lost it all because I didn't reach my goal of 25 cents. Without profit protection, a stock could go up 24 cents and then go all the way back down and go below yesterday's close, and you still didn't get out because you never triggered a trailing stop loss or a stop loss, and you didn't reach your goal. But with the profit protection, that says, you know, I've made 14 cents. If the market, say, reverses and then and say the stock pulls back 7 or 8 cents, maybe I'm only up 4 or 5 cents. Fine. The profit protection will kick in and just give you something. I don't care if I walk away with a nickel. Give me something. Don't make me just walk away a complete loser. So that's what profit protection is, and you can use percentages there also. Then you have your traditional stop loss. A stop loss kicks in if the price declines this much based on your entry price. So if the stock completely reverses, let's just say we go ahead and put 30 cents in here for a profit loss or a stop loss. A 30-cent stop loss says that if I bought the stock at $1 and if it goes to 70 cents, take me out. Whereas a trailing stop loss, very similar to the stop loss, but that is based on the high of your trade. So if I bought the stock at $1 and it goes up 10 cents and then pulls back 30 cents from that high, it'll take me out. So in that case, I will have only lost 20 cents. Whereas this one here will, even if the stock went up 10 cents and then pulled back 20 cents or 30 cents, it would still require you to go back the whole 10 cents that you were up plus 30 cents additional, because this is based on your entry price and this is based on the high of the trade, the high price of the trade. And then the re-entry pullback simply says once I close a position, the stock price has to move by this amount before I even consider going back into it. Because it's an automated trader, you may have exit rules that take you out of a trade, but then immediately your open position rules might all be true. Your open position rules may say buy that stock, even though the exit rules just said take me out of that position. So in this, that's why we have the re-entry pullback, so that we don't go right back into it. Let's just put that at a quarter and say, okay, when I close a position, I don't want to consider going back into that position until it moves by at least a quarter after I close the position. So that's your profit requirements tab. And between your profit requirements tab and all the other tabs, this encompasses an entire strategy. All tabs must be filled out. So we can click Save. It'll clear our stats, and it'll save the strategy. Once you're all done saving your strategy, and you've made all the changes that you want, you go ahead and click Return, and it takes you back to the main screen. And it re-retrieves your strategies, just in case you change things. And here we're saying, this is my default strategy, this is my long strategy, and then here I have my default short strategy. Once I have the strategies selected that I want, and you've edited them, and everything is perfect, you can exit the strategy wizard, and then run the automated trader, and it will pick up these strategies. Thank you.